Really wonderful to be in Istanbul. Thank you very much for inviting me. My name's James, and I'm a naive Sagittarian optimist. We're clearly living in a very turbulent world, but I believe it's a time when it's the most fantastic time to be innovating in your business or in your company, or indeed starting a new business. I want to tell you a story about the creation of Zopa, and I want to tell that as a personal story, not because I want to tell you about me or because I like talking about myself. After all, we've just heard that you're the hero in this story. But because I hope that it illustrates something for you that might be useful in your work, wherever it may be. Before I do, I want to tell you a little story about the name of Zopa. About 6 weeks before we launched, my marketing director, a lovely lady called Sarah Matthews, came and tapped me on the shoulder, and she said, "James, we've got a problem." I said, "Sarah, we have so many problems, it's not true. What's this one?" She said, "We still haven't got a name." And I'm sure in your business, in your organization, if you're running a project, you agonize sometimes about, what are we going to call it? What are we going to call this secret project that we're working on? And as founders of a company, we'd all spend lots of time sort of thinking of names. What could it be? What could it be? But we'd never found one that we were entirely comfortable with. And at the time, we were working in Benchmark Capital, a venture capital company. We were working out of their offices. And we did the thing. We did the let's all go into the boardroom, and we're not going to leave here until we've got a name. And we'd been in there 6 hours, and it was starting to get really boring, and we hadn't quite cracked it. And somewhere from the back of my mind, I remembered a negotiation course that I'd been on when I was at business school. And I was on a course. There was 120 people on the course from 40 countries. At the end of the course, I came 120th out of 120. But I did remember one thing. And the thing I remembered was Zopa, which stands for Zone of Possible Agreement. So if I'm trying to sell you something, there'll be a price below which I won't be happy to sell. And if you're buying something, there'll be a price up to which you're happy to pay. And as long as those two overlap, as long as there's a zone of possible agreement, and as long as we stay talking long enough, then we ought to be able to haggle a deal. And we thought this was wonderful, because this is exactly how Zopa worked. Think of Zopa as like eBay, but for money. So we were really thrilled with this. Incredibly, we went online, and we could find the domain name. It cost us £100. We were thrilled, a 4-letter acronym that is exactly what our business is. We went out into the venture capitalists, and there were some analysts that were still working late, and we said, "What do you think?" And some of them hated it, and some of them loved it. So we thought, that's okay, a bit of resonance. We rang up some designer friends and said, "Can you do us a logo on this?" And they said, "Yeah, it'll be fantastic. It'll be a Z and an O and a P and an A." And they got very excited. And then 6 weeks later, we launched. And very shortly after launch, I started getting the first of many hundreds of emails that subsequently came in from Russia. Because in Russia, Zopa means arsehole. Zopa began in a barn. I'd been working as strategy director at the time, a leading internet bank called Egg. And I decided to leave and joined up with a guy called Richard Duval and a guy called Dave Nicholson. And we just decided we wanted to work together. The only problem was we didn't have an idea. But Richard was a smart guy, and he said, "Well, let's go and sit in our barn, and let's see if we can create an idea." That was terrifying. So we literally went to this barn, and we thought, well, in order to create an idea, we better make ourselves up a story. And so we started working with 2 groups of people. We started working with a group of ethnographers. I don't know how many of you have come across ethnography, but it's basically the study of observing how people behave and then interpreting their behavior to get a deeper insight into them. It's a form of consumer research. And what the ethnographers were telling us is that there was a new group in society that seemed to be breaking away from the mainstream at the time. These people were best defined by their own self-reliance. They'd given up on the institutions of society. They no longer believed the company was going to look after them. They were dissatisfied with homogenized service. They valued control, authenticity. They cared a little bit more about the clothes they put on themselves, the food they put inside themselves. And we found that this group was not a niche group. It was growing very quickly all around the world. Perhaps best epitomized in the early 2000s by the first people in the dot-com boom. People who were much more self-reliant, looking after themselves. Perhaps they had multiple income streams. And we got more and more interested in this group when we started working with some socio-economists from Cambridge University. I'm not an economist, but socioeconomics is the theory that how does economics impact the whole of the society in which we live? And they followed the school of a guy called Schumpeter, who talked about waves of creative destruction. And he traced a path back to the Industrial Revolution and defined 5 waves of change that happened in which whole economies dragged technologies through them. And if you like, the economy was then defined by that set of technologies. The last era was clearly one that was defined by mass production, mass distribution, mass retail, the consumer promise of the 50s and 60s that still lives on today. But clearly we're living in a new era powered by technology that's much more individualized in its nature, that puts the user in control. And we thought, well, if that's the case, then surely we should see new businesses starting to speak to these consumers who are thinking differently and this era which is being defined differently. And of course, the winners of the last era weren't going to go away, just as we still have railways today from several eras ago. And so we looked around the world and we saw people like Walmart or Tesco, who, if you like, were dominating the mopping up of the last era. But when we looked for where the new growth was coming from, it was coming from much more individualized formats that put the user in control, that were much more individualized, much more tailored to the user's needs. And some of the commonalities were that these services got richer and richer the more people participated, creating benefit for the whole. And you'll know many of them. And this trend was clearly trashing whole markets, be it music, be it travel. And we wondered what could we do with this in the financial services space. We also wondered some other things. We asked ourselves some questions. Why is it that individuals have to pay more for money than companies? Why should that be the case? And we went back in history, and we went back to, I guess, the forerunner of Starbucks in the docks of London, the old coffee shops where we've heard people used to gather. And we looked back and thought how entrepreneurs in that era perhaps used to meet in coffee shops with their bankers and tell them stories about how they were going to go off to the West Indies to discover spice. And perhaps the banker would believe their story and would invest in them. And that world has clearly developed and got replaced by a thing called the bond market, in which companies issue debt, and that debt gets traded freely on a very liquid market, or at least until recently, around the world. And we wondered, what if there was a bond market for individuals? What if I could issue debt in myself? Perhaps as David Bowie did a few years ago. What if people could lend to me based on information that was verified by a third party? What if that were possible? I thought back again to when I went to business school and I needed to borrow money. I went to a bank. They asked me a load of questions. They wouldn't tell me how much I was going to have to pay before. I then had to take all of the money in one lump, and then I'd have to pay it back over 3 years. And they told me that would cost 10%. It was then I remembered I had parents. So I went to Mum and Dad. I said, "Hello, Mum. Hello, Dad. Remember me?" They said, "Yes, darling, you're our son." I said, "Can I borrow some money?" My dad is Scottish, and if you know anything about Scots, they're quite tight with money. And Dad said, "Yeah, of course you can, darling, but you're going to have to pay for it." And so we talked and we haggled. I said, "How much are you getting on your savings, Dad?" He said, 2%. I said, "Well, I'll give you 5. He said, "Great." So he was happy, I was happy. The bank was unhappy. We looked at eBay, which at the time was going through its massive growth trajectory all across Europe, having come out of the US. And we wondered what would happen if you put €100 on eBay. What if you sold €100 on eBay? And in the terms and conditions, it said you can't sell You can't sell small children, you can't smell arms, and you can't sell money. But we wondered, what if eBay did money? And we put all of those ideas together and created Zopa. So Zopa is a marketplace where people meet to lend and borrow money. So people that have money can lend it to people that haven't or have a need. And we weren't doing this for anyone. We were doing this for good quality prime borrowers. And the way the market worked was really simple. As a borrower, you came in, you had all of the checks that a bank perhaps would do on you to check your identity, check the veracity of your application, and then you were placed into a market with a certain level of risk depending on your risk profile. On the other side, lenders would come in and they were asked 4 questions. Firstly, how much money do you want to lend? Over what time period? To who? Where who was the level of risk? And at what rate would you want to lend? You were asked, what rate would you be happy to lend your money? Now, the clever thing about Zopa was that when you lent your money, you didn't just lend it to one person, you lent it to many people. So if you like, your loan was spread across many, many people. And that meant you weren't bearing a significant risk of any one individual. And the reason the organization worked is just like lending money to a friend. If I need to lend 100 euros to a friend, I just give them 100 euros. When a bank does that, they have to keep a certain amount of euros in their back pocket in order to protect the savers that have given them money in order to lend out. And because Zopa didn't have that structural cost, that capital cost, if you like, that was put on it by regulation, it meant that cost was taken out of the system. And we also didn't have towers, in parts of cities or branches all over the country, or legacy systems or legacy people. We were 5 people by that time, based in a barn. So we move on to today. More than £250 million has been lent out through the market. Borrowers can borrow more cheaply from Zopa than anywhere else in the UK. Lenders are getting great returns, many times what they could get from their bank. And people are paying back. We do credit checks in a very careful way, so less than 1% of people have not repaid. And that's all taken into account when you make your lending offer as a lender. Our thought behind Zopa was that people could trust people with money. When I asked Robin, our youngest son, who at the time was 4, I said, Robin, please draw a bank for me. And even at 4, he knew how to draw a bank. It was a box. It had very secure windows, and it had a deposit box, a safe in one corner. And I thought, that's ridiculous. Why on earth would you set up an organization to protect against the 1% of people that are bad, rather than to rely on the 99.9% of people that are good? What if people could trust people with money? Since then, lots of copycats all around the world, proliferation of models. At last count, I think I counted about 50 different versions of Zopa in about 30 countries. Even the Bank of England is now saying it's going to be here to stay. The banking middlemen may in time become the surplus links in the chain, where music and publishing have led, finance could follow. And the reason that Zopa is working is that for freeformers, for these people that are defined by their own self-reliance, they value control, they value community, they value transparency, and they value businesses that deal in an ethical way. Right from day one, we had an open discussion board, so people could write what they want. That doesn't sound particularly, I guess, foresightful now. But can you imagine a big global bank having an open discussion board? Even today, they just don't. Compliance wouldn't let them, legal wouldn't let them. But it's the most wonderful thing. It was our best source of ideas. When we did something wrong, we got complained at immediately, you did something about it. When you did something right, people helped. Half of our customer service is now provided by our own members. We made ourselves terribly available, and of course it's easy to do when you're small, but we would go around the country and go and see people. We would open our business up so people could come in. On our first birthday, I think 6 customers came in and brought us presents. It was quite remarkable. But our openness was incredibly valued. Users were valued. So as lenders, you got to see who your borrowers were. Not as individuals, you couldn't go and stalk them, you couldn't go and find their homes, but the borrowers could send messages back. They could say thank you. And that human connection, to know that you were lending money to someone who needed it for something, and for them to be able to say thank you, that human connection makes an incredible difference. And of course, Zopa is now part of a much wider movement, the movement that Rachel Botsman, the Australian, called collaborative consumption. This notion that people can share, can exchange between each other and create whole new products, whole new service categories. And people like Zipcar and Airbnb are just absolutely phenomenal in their growth. And I think the next era will be defined by objects as much as today's is perhaps by people. And organizations like Everything are really piling into the Internet of Things, and I think some very creative ways. And actually for you all as marketeers, I'd urge you to have a look at what they're doing with Diageo. So a few things I learned along the way. When I worked in a business, I always thought that in order to get something done, you needed to pay for it. As an entrepreneur, I learned that you just ask people for help. And asking people for help is a very human response. Will you help me? Most people say yes, most of the time. And there's a whole different economy out there of people helping one another. Getting really clear on your purpose. Our purpose was that people could trust people for money, and our role was just to make that happen, make that possible. Get really clear on your insights, and then challenge everything. We were clear that the way that banks tried to deal with these self-reliant people just didn't work, because banks were set up for the last era. Banks couldn't understand individuals that had multiple income streams. They didn't compute. They didn't understand people that changed their roles the whole time. We stood in the future and looked back. And my observation is that when you do that, you see possibility. Whereas when you stand today and look forward, you see obstacles and barriers. All of my friends from Egg and all of my friends that I knew in financial services said that Zopa wasn't possible. It couldn't work. It wouldn't be legal. It wouldn't be regulated. We couldn't keep it safe. That wasn't true. And if I stood in the future, I knew that wasn't true. So we and a group of committed people made that possible. In many organizations, I think we spend a lot of time telling people what they're bad at rather than celebrating what they're great at. And I certainly found that myself with the other founders, actually just liberating committed people to be the best they possibly can be at the thing that they're best at was just an incredible feeling to watch and to participate in. Everyone had permission to fail. And again, I think in many organizations, we're limited by that fear of failure. Actually, if you make a mistake, it's fine. Most people, most of the time, are trying to do their best. And that's a good thing and should be celebrated. And of course, as any entrepreneur, listening and adapting fast. But ultimately, as you think about your business, about taking it forward, about your story, ultimately, as we've just heard from Jonah, it's about your consumer. They're the heroes. It's them that you really need to understand. I want to leave you with a quote, one that you may have seen before from Margaret Mead, the US cultural anthropologist. Never doubt that a small group of committed citizens can change the world. Indeed, it's the only thing that ever has. My name's James. I'm a naive Sagittarian optimist. We're living in an era of uncertainty, but I believe it's a wonderful time to be innovating in your business. Thank you.